Hello guys, welcome to Visual Traders. Today I'll be doing an exercise which will be a shout out to all you potential option sellers out there, and it will fade out some of the jitteriness of option selling, and it would not come heavy on your pocket because the capital size would be 4.5 to 5 lakhs. So the setup is something like this. We'll be utilizing 4.5 to 5 lakh of the capital. We'll be selling weekly expiry in the whole month of June, starting from 1st and ending with 30th. The strikes would be as per our analysis on the price action, and Pivotal Traders have its unique way of looking at the prices each tick by tick. I'll be utilizing that, and we'll be selecting, if there is a sense of confusion, we'll be selecting at the money straddles, and the exits would be on the expiry day at around 12 o'clock, and there will be some risk adjustments as per the movement on both the sides of the break even. So let's just quickly hop in. We'll be selling 6 lot of the straddle, and for the sake of simplicity, what I have done is I have already calculated that around 10% of your premium which will be credited would be used on hedging side, which can reduce your margin. What you will do is you will buy premiums of around 25 rupees on both the sides, put and the call, and you will hedge your position to get the margin benefit. So let's suppose you're getting 1,40,000 as a required margin for selling the straddle, but when you hedge it, the margin will come down to 70,000 or so, and you will be comfortably be able to sell the straddle with 4,30,000 or 4,35,000 to 40,000 range with 6 pairs. Okay, so I will be not discussing the points of the hedging side to keep the position size as neat as possible. Okay, so I'll be keeping the position profitability as neat as possible so that you don't get confusion. Okay, so let's just quickly start here. So we're sitting on 1st of June here, and we have seen that the price have taken a up move, and it is clearly now maintaining its stance above 20 moving average. So let's just quickly play it. What has happened at, we'll be looking at 2-3 candles on 1st of June, and then we'll be taking some trades. So the first candle was very much reactive. It gave some sense of demand, and then the price came to the average of 35,457. Okay, so what we'll do is we'll quickly be going to sell 35,500 straddle at this price. So we go here and we choose here 1st of June we are sitting on, and our payoff day would be 3rd of June, and we'll be selecting 3rd June expiry, and we are sitting at 9:45. So this is 9:45 time, and we get the option chain here, and we go to 35,500, and we sell 6 lot. I've already calculated it. So 6 lot on both the sides would be easily be sellable with 4,30,000 rupees of your margin. Okay, so here we're sitting here, and let's just play it off. So whole day you're seeing that some kind of movement is taking place in the price, and our profitability started at after 12 o'clock, 4,000 profit, and if we run throughout the day, by end of the day at around 3 o'clock we are in profit of around 12,000. Okay, so let's just also play it here what all price action front was happening. So you can see that a large downside move and bearish trend did happen here, but by 3 o'clock still we were in profit. Okay, because we saw that a bullish trend is there, and that's what we depended upon. So the 1st of June was very much comfortable in a sense, even though there was some downside move. Now when we open on the 2nd of June, we see that a continuation, a gap down, and a bearish trend is taking place, but will not be touching up because our breakeven is 34,851. So until unless the price goes below 34,900, we will not be doing any adjustments. So 34,900 is somewhere around this. Okay, so let's just play it and let it run the course of action and let us eat the premium as much as possible. So the 2nd of June also looks very comfortable so far. So you can see the sideways movement and then breakout on the upside. That means the bullishness is being maintained here. And on now we have jumped in on the expiry day, and on the expiry day we have decided that by 12 o'clock, by this time we will be exiting our position. So let's just run it. Okay, no adjustment to be made, and now we'll be exiting our position on 3rd of June at 12 o'clock. Okay, 3rd of June 12 o'clock, and we see check the prices of 35,500 calls and puts here, which is 129 and 73.95, and we close these positions. This was 129 and 73.95. so we close this position, and let us just write this profit. So we close this position, so let's just write this profit, 66,990 rupees. Let's just go to this Excel sheet and just write here 66,990. Now what we'll do is we'll be sitting on 4th of June, and we'll be paying off at around 10th of June. The next expiry we'll be doing that 10th of June. So we'll be analyzing if we can take any trade on 3rd of June, but let's see let's see what happens. So 3rd of June we did not take any trade, and 4th of June definitely some trade would be taken, because if we are to see that this momentum on the upside should be maintained or not. So 4th of June you see that the first candle was very much reactive, and it gave a sense that the bullish trend is there, the bullish momentum is there, and the bullish sentiment is still there in the market. But let's just see a couple of more candles, maybe 2 more, and then we will enter into the trade. So you see that our attempt is being made to form higher high, but it is being negated. So we are sitting at 10 o'clock, and we see that some kind of movement, some kind of uptrend is being negated here, and we are witnessing a formation of tail on the upper side, which means that supply has come into the market, and we'll be acting accordingly. So what we'll do is we will not be selling 35,700 of the straddle. We'll be selling the average, which is 35,600 straddle. Okay, so let's just go here 35,600, and we are sitting at 10 o'clock. This is 10 o'clock. Okay, this is 10 o'clock, 4th of June, for the 10th of June expiry, and just go to 35,600 straddle. Here we sell this on the call side and on the put side here. Okay, so this is now our second trade of the week, and let's just play the price action fund. So the break even is here of 34,658. so we'll be making a neutral zone box here, 34,600 something here. Okay, and on the upper side 36,500 something. 36,500 is somewhere here. Okay, so this is our neutral zone. Let's just run it now. Let's just see what has happened in the market throughout this time. So let's just run it until unless we reach any of the positions till 10th of June 12 o'clock. So you see that the 4th of June was very comfortable, and 7th of June was Monday after 2 days holiday, and that is also being a very non-directional kind of market. And 7th was quite easy. 8th looks very challenging in front of the price action front, but no adjustment is to be made right now because previously the bank nifty was bullish and any bearish sentiment should be checked by the bulls, and that's what is happening here. The market fell off, but it is being checked off. You see that now a good amount of downside move has taken place here. So a good amount of downside move has taken place here, which was touching our break even of 34,600, but still we will not be doing any adjustments because we see that a strong reaction did take off at around this place, but it was not able to accept this price as a new low. So again a second reaction happened here, so still we will not be doing any adjustments. So simply we'll be waiting till 12 o'clock and just see what has happened at 12 o'clock here. So yeah, that's it. 12 o'clock has reached and we see that the price has fallen at around 24,900. So let's just go to 10th of June here and see for ourselves what we have hopped in, and we go to 12 o'clock and we see here get the option chain 35,600 CE. So you see that we did not sell 34,700 at the money straddle at that time because we were seeing some kind of bearishness. Okay, so we sold the average price of 20 moving average. So 35,600 is currently now trading on 10th of June at 12 o'clock for around 8 rupees on the call side and 693 on the put side. So let's just close this. So this is 8 rupees and this has gone 693 or something was there. Okay, this was, let's just check again, 35,693. okay, no problem. So we have hopped in around 36,000 profit here. Let's just quickly write it anyway 36,000 we have made here. This should be summing it up. 36,315. Okay, so we have closed the trade of 10th of June, and now what we're doing is we'll be analyzing the market for the next expiry, the 17th of June. What we are witnessing now is that the price has gone down and it has gone down below the 200 moving average. So what we will be doing is now we'll be creating a straddle at 3 o'clock on the 10th of June expiry day. So let's just see what has happened. We'll be analyzing the price action and then we'll be taking some trade here. So you see very sideways kind of movement is taking place here, and at 3:15 we see that regaining the 200 moving average has taken place, and at this point I should not be getting greedy about it, that it should maintain the uptrend, seeing that the kind of candle has formed here. So I will be selling the 200 moving average, which is 35,100 straddle at 3:15 on 10th of June for the 17th of June expiry. So let's just remove this and sit on 10th of June. Payoff would be 17th of June, and so 3:15 and get the option chain 35,100 straddle. We sell on the call and the put side. So that's it. Our break even is 34,200 something. Let's just remove this 34,200 on neutral zone is there. So 34,200 somewhere around this, and on the upper side is 35,957. So let's just quickly play this and see what has happened. So very comfortable so far. 11th of June, not much is to be done, because earlier the Bank Nifty was bullish, but now it has went bearish because it is trading below 200 moving average, and it has also formed some gap down and was maintaining that. And we see that after the gap down it has made a good recovery with a V-shaped recovery, and we have came a long way. You see that we have came a long way, and still the price is just revolving around 200 moving average. So this is the kind of movement we expect for the option sellers to be the most gainful. So you see, not much is to be done. The price is very much sideways. We are very much comfortable in our vicinity, and we are reaching 12 o'clock on 17th of June. So this is just 2-3 candles away. Let's just slow the speed and play it. 11:30 and 12 o'clock. So you see, not much has happened, and we have sold the 200 moving average straddle, and that is come of great benefit to us. Now we just go to 17th of June, 12 o'clock. And we check the price of the 35,100 straddle. This is 14.55 and 375. 14.55. So we have hopped in around 70,207 rupees in this particular expiry. So let's just quickly write it. 70,250 rupees, 207 rupees, 70,207 rupees here. Okay, and now we are on the expiry day. What we'll do is we'll be looking at the price action till 3 o'clock and then deciding whether to take the trade or not. We are not forced by any of the urgency. We're just looking at the price action. If there is trade, we'll be taking out. If there is no trade, we'll be waiting for the next day. So we see that the sideways movement is being maintained on the expiry day, and we have reached 3 o'clock here, and 3 o'clock we see some kind of bearishness, and we have also by accident we have also fell into the 930, and this was also a no trade zone for me, because it was kind of there was so many gaps on the upside. So I would expect that the Bank Nifty should come in and cover this gap. So let's just wait till 9:30, 9:35 or 9:45 on 18th of June and then take the trade. So this is 10:15 and bearish sentiment is being maintained here. So, and the gap is not being able to be filled. So what we'll do is we will be selling, and we have seen some kind of inside candle has been formed here, and so this kind of indecisiveness is still there for me. I should not be forcing myself to get into any trade right now, because the market is behaving complete different to what it was before. So I would be waiting till 12 o'clock. I will be waiting for the price to fade in and to settle in. So let's just wait till 12 o'clock and see. Okay, so what we see here is that a bearishness is there in the market, and what I will expect now, the price would come back to this level and should spend some time around this level. So 34,500 would be my next straddle to be selling for the next expiry. So let's just quickly reset this and go to 18th of June at around 12:30. 18th of June for the next expiry, which is 24th. So 24th of June would be the next expiry, and we'll sitting on 18th of June till this one is 12:30. So 12:30 we are at, and we'll be selling 34,200 straddle here. Okay, so on the call side and on the put side. So that is the easiest thing we have done. We're just selling the straddle, as easy as that. So let's just play it now. So our neutral zone is now 33,300 to 35,000. So that's what you're seeing, that I have drawn that, and the price is spending some time around that, and the moment it will skip the 200 moving average with a bullish candle, I will be looking for some adjustments, because 35,000 is our break-even point, so I should not be looking to risk my profitability up till this level. So yeah, a bullish candle has formed here. So now I will be doing some adjustments here on 21st June at 21st June at 2 o'clock, 2:30 exactly. So 21st of June we have to jump in. So this is 21st of June. Let's just go to 2:30. Now what ideal thing is to be done here? So the ideal thing, what I'll do is here I will close my position of 34,200 both the sides, and I will shift my straddle to the 200 moving average, which is 34,800. Okay, let's just do that now. So let's just get the option chain here and just check the price of 34,200 calls in the puts, 695 and 115. 695 and 115. So we close this position, and we'll be moving up our straddle to 35,800. Okay, so we have done this. Now have we done correct? Yeah, we are correct now. So let's just run it now. We are still 5 days far off from the expiry day. So now our expiry, the break even is 36,900 on the upper side. So we'll be spending some amount of time to analyze what is happening now. So you can see that a rotation is being happening around the 200 moving average. So we have come far off. We have come till 23rd of June. Let's just see how it looks here. 23rd of June. So 23rd till 3:30 we have, I think some mistake is there. Let me just correct this. So let's just write this 2122, because there is some issue with the Opstra. 2122. 2122 was our profit, and reset this, and then we go to here. We took the trade, and there was some problem with the Opstra, and so I have decided that I will again put the trade here. We did 34,800 straddle here, so 34,800 straddle here on 18th, on 18 at around 230. Okay, okay, this was our straddle now. So we have run it till 23rd. Till 130. So take time sometimes. Okay, till 2:30 we have hopped in around 38,000, and let's just run it till 12 o'clock on 24th of June. So far good, no adjustment is to be made here. Okay, that's it guys. 24th of June, 12:30, you can see 12 o'clock, we'll be exiting at 12 o'clock. So 23rd of June, this is 23rd, 24th of June. So this is 12 o'clock. So we have hopped in around 81,000. Let's just close this now. Let's just write this profit now there. So this was our first profit, and for the second profit is 81,000. $81,277, and previous profit was around 2,000 rupees. That was it. Now we are entering into the last few days of the June month. So what we'll do is, for the sake of just completing the month, we will be doing trade on 1st of July expiry also. Okay, so we'll be sitting on 24th of June. Let's just see whether to take any trade or not. So ideally what has happened right now is that the price, which showed some kind of bearishness, has made a V-shaped recovery like here, and now it is spending some time around the 200 moving average. It is taking its time to accept the 200 moving average as a new normal, and after accepting this normalcy, it will go back on the higher side like this. So what I expect is that the price should move above 35,400, but for the sake of sticking around the 200 moving average, I will be selling 35,200 straddle here. Okay, because we see that the price has come down from this level. So if it reaches around this level, it will spend some time. So all we need is the price should spend maximum time around our straddle. So 35,200, let's just sell that. Okay, 200 would be below this. It would be safer for us if there is any downside move. So 35,200 will be sold on 24th of June at let's just say 3 o'clock. Let's just see what has happened. Yeah, at 3 o'clock we will be selling this. Three o'clock, get the option chain, and expiry would be 1st of July. Here would be 30th. So we have decided to sell 35,200 straddle. 35,200 straddle. 6 on this side. We're not able to sell 35,200. So let's just move to 35,300 here. Okay, 35,300. This is it. Let's just run it now till 30th of June and see what has happened till that particular time. If there is adjustment to be made, because our break even is lying at 34,450. So any downside move is a little bit worrying for us, but no such requirement is so far. We have reached 28th of June. So no such requirement here. So you can see that some kind of downside move did happen here, and it took a support around the 200 moving average. So at around 3 o'clock we will be exiting this position, because that would be the end of the session, end of the month for us. So let's just do that. So yeah, so after this, usually after this candle I would be exiting this, because it has broken the 200 moving average with a resolute candle, because it gave some reaction here, but on the second time it was very much confident to pierce it. So at 1:30 I will be exiting my position on 30th of June. Thirtieth of June, 1:30. 30th of June, 1:30 will be exiting. 72,000 will be hopping in. $72045. Okay, so this is the reaction now. Now I have told that we'll be spending at around 10% of our profit in hedging the positions. So let's just quickly do that. So 10% of this is 32,000. Now our net profit should be something 2,96,000. So 2,96,000 made on 5 lakh of the capital. So it would be how much percentage return? 512. So around 60% profitability we have run this, and this is just trading out of moving averages. As simple as that. I hope you liked the video and you have also learned how consistent it is for us to make money through option selling, and it is also not heavy on our pockets. So stop criticizing SEBI and start making some rational decisions. I hope you like the video. Do share, subscribe, and keep watching. Thank you.